Hey everyone, welcome back to Corporate Decoder. Today, STBLCOINX Inc. just filed a Form 8K, and I am seeing a very interesting debt restructuring that could signal big things. Quick note, this is not financial advice, just my take on public filings for educational purposes. Essentially, they've swapped a chunk of their old debt for new warrants, and that could really change how this company is valued. This is a current report that companies file when something big happens, something that investors need to know about right away. For StablecoinX Incorporated, the big news dropped on the 21st of August 2026. It is all about how they're handling some old debt. So remember that business combination back in June 2026? Well, before that, the company, then known as TLGY Acquisition Corporation, had some convertible promissory notes. Basically IS that were issued to some sponsors. These notes added up to about $6.9 million. When the merger happened, StablecoinX Incorporated took on that debt. Now, fast forward to August of 2026, the company and these original sponsors sat down to figure out a new deal for that debt. They agreed on a plan to restructure it, and on the 21st of August 2026, they signed the official agreements. Here is where it gets interesting. Instead of just paying back the old debt with cash, they're doing a mix. About 5% of the original debt amount is being paid in cash. That is the straightforward part. But the big news is what they're doing with the rest of the debt. A huge chunk, 47.5%, is being paid off with warrants. These are like options to buy the company's stock later. They're issuing these warrants at a price of $1 each, and each one lets you buy a share of their class, a common stock, for $11.5. And there is another batch of warrants for the remaining 47.5% of the debt. These are being issued at a slightly lower price of $0.75 each, but they come with a higher exercise price of $15 per S-share. So they're basically trading debt for the right to buy stock in the future. These new warrants can be used starting about a month after they're issued. The first set of warrants will expire in June of 2031, and the second set will last for 8 years from when they're issued. Now, these warrants are special. They're called private placement warrants, and that means they have some unique rules. For as long as the original sponsors hold them, they can be exercised without paying cash, and the company can't just buy them back. However, there is a catch. If the sponsors sell these warrants to someone who isn't considered a permitted transferee, the warrants lose these special benefits. They become redeemable, and the cashless exercise option disappears. This encourages the original sponsors to hold on to them or transfer them to friendly hands. And importantly, by agreeing to this restructuring, the original sponsors are essentially giving up any claims they had on the old notes. Once everything is sorted out according to these new agreements, those old notes will be considered null and void. This whole deal is considered an unregistered sale of equity securities. This means they didn't go through the usual process of registering these warrants with the SEC. They're relying on an exemption for transactions that don't involve a public offering. Let's look at some of the details of what is being filed. Exhibit 4.1 is the actual form of these warrants, giving us the precise terms. Exhibit 10.1 is the form of note consolidation and restructuring agreement, the actual contract outlining how the debt is being reshaped. And finally, the filing lists all the exhibits which are the supporting documents for this report. Now, why is this debt to warrant swap so interesting? When a company converts debt into equity, like instruments like warrants, it can be a sign of a few things. On one hand, it is a way to reduce the immediate cash outflow and lessen the debt burden. This can be a smart move for a company that might be facing cash flow challenges or wants to preserve its cash for growth. However, it also means that in the future, if those warrants are exercised, it could lead to significant dilution for existing shareholders. Each warrant exercised means more shares outstanding, which can spread the company's ownership thinner. The exercise prices of $11.5 and $15 tell us the company believes its stock price will eventually rise above these levels. Looking at the external context, StablecoinX Inc. Trading under USDEW has seen some volatility. The current price is around $1.05 with a 52. Week range from $0.33 to $1.8. There have been news headlines about surges in stock prices and reports of losses alongside token holdings, suggesting a company in transition with major institutional holders like Saber Capital Management and Aristia Capital. There is significant investor interest, but also a lot of eyes on their financial performance. This restructuring, turning debt into potential future shares, is a strategy we've seen before. Companies often do this to shore up their balance sheets. However, the key will be whether the company can grow its business and achieve those higher stock prices needed for the warrants to be exercised profitably. If they can't reach those exercise prices, the warrants might expire worthless, and the debt effectively remains restructured without the future dilution. But if they do reach those prices, shareholders could see their stakes diluted. It is a delicate balance between reducing current debt pressure and managing future share count. The risk I am watching is the potential for significant dilution if the company's stock price successfully reaches the warrant exercise prices. My biggest concern is whether the company can execute its growth strategy effectively enough to justify that future dilution. What I'm actually looking for is sustained operational improvement that makes these warrants a positive sign of future success rather than just a way to manage past obligations. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this breakdown helpful, please like and subscribe for more and join our Discord community linked in the description.